The market continues to rally higher as the fear of missing out is now settling into the market, and the sentiment around the market is shifting very quickly. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. So today SPY was up 0.32% and we're starting to get the breakout of the resistance trend line, and we're closing right here at the 50% retracement of the bear market, which is at SPY 414. So going into tomorrow, we do have PPI data before the market opens, so obviously that is going to bring in some volatility into the market. But as far as the chart says, we still have the bullish price action and the bull trend, and the price action did close back over all of the moving averages yet again. So yes, while we can always get a pullback, we have a ton of support for the bulls to work with. So even in the event that we do get a pullback, we have this critical risk level of support between SPY 407 and 408. Keep in mind the support trend line is a moving target, so your risk level could have been right around SPY 404, but now that's all the way up here around the risk level of the breakout around 407. So if you're a bull in SPY, move your risk level up to 407, because if we break 407, then we could come all the way down to 400, which is also the rising 50 EMA. So if we do start to get a pullback tomorrow, it is likely going to be from this resistance at SPY 414, and there is the chance this is a little bit of a false breakout if we see a sharp reversal from that resistance. Now if we break through the resistance, then we're well on our way to SPY 425, and we do have a gap to fill on the way there around 421. So you'll be looking for a stair step higher along this bull trend to continue to climb to higher prices if we start closing above 414. The first few times we closed above 414 were bull breakouts, but we were just getting way too far overextended, as I talked about on February 2nd. And do keep in mind, we still have a lot of bears trapped in this market. Even the bulls that bought the absolute top on February 2nd are still only down 0.68%. So this is definitely a very powerful bull trend with a lot of trapped short sellers that are continuing to get squeezed out of this market. So when you have a bull trend with a lot of trapped bears, they will get short squeezed above resistance, and that's why we're looking for that impulsive breakout above SPY 414. Now there was a lot of fear of missing out and a lot of FOMO buying across the market today. So I will not be surprised in the slightest if we do get a sort of double dip back down towards support before we go any higher. So as always, I tell you, nobody knows what's going to happen, and the market couldn't care less what you think is going to happen, and the market couldn't care less what I think is going to happen. That is why we strictly follow what the price action is telling us on the chart. So flip a coin and half of you will be right and half of you will be wrong. Nobody cares, and nobody is going to trade based on your ideas. We are only trading on what the price action is telling us, and we will not know that until we see what happens from SPY 414. On the NASDAQ 100 triple Qs, we were up 0.77% today, so we continue to see the tech sector looking very strong as we're marching higher along this support trend line. Now keep in mind, the bears are still trapped in the triple Qs from the FOMC high, which is right around levels of 300. So we do have a very high probability chance to squeeze those short sellers out of this ETF if we do get the breakout above 311 to 313, which should take us well on our way towards the gap close at 322. Now any rejection from resistance could take us back down towards the 20 daily moving average, and that's going to be a strong support zone between 298 and 300. Below that, we could revisit the neckline breakout at 294, because remember, this is still a giant double bottom breakout that's taking us into the 320s as long as the triple Qs is above 294. So follow the price action, and you know the trend is still bullish as long as we're above all the critical support, and let the price action guide you on where we're going from here. And so far, the trend is still pushing price higher. On the Dow Jones, we were up 0.15% today, and the price action continues to close above all of the moving averages, and we do have the confirmation of the breakout of this bull flag, which easily takes the Dow Jones into the 350s. As long as the Dow can hold this breakout around 339, we are likely heading to 353, and the next critical resistance to break will be 346. If we break down below 339, look for the strong support at the bottom of the flag, which is around 334. On the Russell 2000 IWM ETF, we were up 1.01% with a strong bounce off of that rising 20 daily moving average, but we're going to have very critical resistance between 195 and 196. If we do get rejected from resistance, we could come all the way back down towards this gap fill around 181. So that is going to be a very important level to pay attention to in the IWM ETF. If we break that, we could start marching higher towards the low 200s. So that is going to be a very critical resistance zone you want to pay attention to, with the critical downside support at 191 and the neckline breakout at 188. On the ARKK ETF, we were up 5.88% today, and the ARKK ETF is getting a strong bounce breakout back over this resistance at 41.66, and we're back testing the support trendline breakout which could now act as resistance, which is going to be right here, right around 43. So in the event this is just a bounce before the next leg lower, we're going to be looking for a rejection from that resistance, and that could send us back down towards that support at 38. However, if this is a bull breakout, this does take us to higher prices, with the next upside targets being 44.5 and then 45.7. On the VIX, we were down 3.7% today, and the VIX continues to get absolutely obliterated, and it is now crushing all the way down below 18.5, coming down towards the support around 18. Remember, the VIX down below 20 this long and the VIX getting crushed this hard is usually bull market behavior, so a low VIX is not a bearish thing if we're in strong bull trends, and so far we are in strong bull trends as the VIX is crushing. We're only getting more cautious if we see the VIX starting to elevate and spike out above 20. On Bitcoin, we're currently up over 9% with an absolute face ripper off of this support level, which was right here around 21,300, and now we're bouncing all the way back above to a new daily higher high above the breakout at 23,760, and we're well on our way to the next price target between 24,460 and 25,000. Now keep in mind, this could be the last leg higher before we see the Bitcoin correction, so you should not be chasing this move if you missed it. That is why you buy near support where you have well-defined risk. If you're buying up here at resistance and this turns around and goes in through a 30% correction, I'm sorry to say it, but you're not trading well and you're going to get hurt chasing things you missed. So no, I do not suggest chasing Bitcoin if you missed it. There's a very good chance we can see a rejection from this resistance and go into a correction that could take us through the spring. So manage your risk around the support zones between 22,000 and 21,500. And if we break that support, we could be coming all the way back down towards the 200 daily moving average just below 20K. On Amazon stock, we were up 1.46% today, and we're back above all of the moving averages, but we do have a very critical resistance just above at 102. If we can break back over 102, then we'll very likely start running back up towards 109 and then 115. But that is a big if we break that resistance, because there's still the chance we get rejected from it. If we get rejected from resistance, you're still looking for the critical support zone between 97 and 98. And if we break that, we could come back down towards 94 and the gap fill at 90. On Microsoft stock, we were down 1.05% today, and we did test that support zone right here at 267. And so far, it does look like we're bouncing from that level back over the rising 5 EMA. If we lose the support at 267, we have the gap fill at 264. And if we lose that support, we have the gap fill at 258. But overall, this is still a bull trend as long as Microsoft is above the breakout at 255. And we do have this very critical resistance we continue to get rejected from just below 275. If we break that resistance, we can start running higher towards 283. On Nvidia stock, we were down 0.9% today, and Nvidia did dip back down towards the support trend line and yet again found buyers, and we're very close to fully closing the gap at 230.62. We break above the gap, the next target higher will be 244, and the critical downside support levels will be 223 and 213. On Tesla stock, we were up 2.38% today, and Tesla continues to squeeze higher on high volume buying, and we still have a lot of short sellers in this stock, so we are likely going to continue to squeeze higher towards 225 to 230. Remember, this does not need to be rational. As long as we're seeing high volume buying and short sellers continuing to pile in, Tesla is likely going to continue to go higher. Don't bother trying to figure out if this is a fair valuation, because that has nothing to do with the price action, which means we're likely going higher until people stop shorting this stock. Critical downside support is between 204 and 208, and if we lose that support, we have the critical support around 197 and the support trend line right around 184. On Apple stock, we are up 1.39% as Apple is continuing to look bullish, and we're getting very close to some critical resistance between 156 and 157. If we break that, we can start running towards 163, and you can stay bullish as long as we're above 150. And if we break 150, you're looking for support between 148 and the gap fill just below 147. On the financials, we were up 0.11%, and we still have the price action over all the moving averages, and we still have the bull trend, so the financial sector is still looking healthy and strong. The industrials were up 0.62% today. Price action is bullish and the trend is bullish, which means we can continue to march higher. The healthcare sector was down 0.5% today after getting rejected from the resistance at 134, which means we could be trending down towards 130.5. The energy sector was down 1.7% as we're starting to lose this support zone right around 89, but we are finding support around the 50 EMA at 88. So jumping back over to the S&P 500, without a doubt, this is still a bull trend and price action is still well above all of the critical support. So follow the price action and stay trading in the direction of the trend until we see the trend roll over and die. There's no reason trying to guess when that's going to happen because we'll see it in the price action. And as price action traders, we are waiting for price action to confirm everything. The only thing we have confirmed right now is a giant bull trend on the weekly chart, which sends us to SPY 421 or higher, So there is no way we are going to short this bull trend until we have reason to do so. So stay objective and follow the price action and trend, and right now they are both still bullish. Also, don't forget, if you need help in this market, I have the Stocks Channel Trading Discord community where we are absolutely crushing this market by trading with price action. I also have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. So if you need help in this market, I have those two services, and you can find out how to join them by clicking on any of the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.